Let's also welcome in Prateek Agarwal of ASK to get a sense of how he feels things are moving ahead here on. Prateek, good morning. We're back to that 12,000 mark, looking good on the back of flows. Give us a sense of whether you're expecting this move to continue or whether there are any near-term risks that you're factoring in.
So we are hopeful that the markets will sustain, at these levels. We do believe budget has been overall positive for consumption and financials, and over a period of time, infrastructure also gets a boost. The attractiveness of India to foreign investors, particularly on the debt side, has improved. So there is some amount of positivity which is there. So I would be constructive. I am hopeful on the markets at the current juncture.
Okay, Prateek, let's also get in a take as to what your outlook is on the consumption space. Nestle, for one, did deliver a pretty solid set of numbers. How have you looked at the scorecard for most of the FMCG companies in the current environment that we're in? What kind of volume growth are you foreseeing? And are you seeing some outliers within this space, very stock specific?
Yeah, so in the consumption space, the larger ticket consumption is where stress is being seen for sure. So, for example, autos, but smaller ticket consumption of the FMCG paint variety has seen numbers to be more or less okay. Sales growth has been slow, but what is seen almost across the board is a very good gross margin increases. And with a small sales growth, it has translated into substantial PBT growth, and with the tax cuts, nice PAT growth. So that's the story of consumption. If you go back, let's say 1 year, and when people would have projected numbers, the numbers for the consumption pack on the PAT side would have looked similar. So in spite of the economic slowdown, which is impacting so many other spaces, what is happening in consumption is that while sales have slowed down because of margin increases, PAT growth is as per expectation even some time back. And that, coupled with the fact that discount rates have moved down, so similar profit stream, cash flow stream, and lower discount rate is making these businesses more valuable into the present. So we see this happening in 2 or 3 spaces: consumption, smaller ticket, financials, mostly of the retail variety, and also with some of the better run chemical companies.
All right, so that's where you see some amount of action coming in. In terms of timeline as well, Prateek, given that everyone started to talk about green shoots, do you still see the impact of that coming in only after a couple of quarters or as early as Q4 itself?
Yeah, so we do believe some bit of green shoots to be seen almost immediately. What is happening is if one is focused on GDP growth numbers, GDP is some of what gets made in the country plus net exports. Net exports is a negative number for India now with oil prices moving down. We do believe Q4 current account should be very, very balanced. So that gives a small fillip to the GDP on its own. Second, we do believe agri is looking good. So agri, the last crop in terms of volume could look similar to the year before, but the next one, the Rabi season, is a 8% higher sowing that has happened, and prices are higher. So by some reckoning, close to $25 billion of extra flow of money into the hinterland would happen, and that should have some positive rub-off on very many sectors. Consumption obviously stands out as one of the key beneficiaries.
Right, that's the view coming in. Give us a sense as to what you made of the overall macro and market disconnect, because we have been seeing that the slowdown is quite evident with respect to the GDP numbers. The kind of IIP and CPI inflation numbers also seem rather disconcerting. Respect to what was announced in the budget, do you think that that reaction that we saw on the day of the budget was a bit unjustified, and how you're looking at the overall macro picture vis-a-vis what's happening with the markets and that polarization?
Yeah. So, markets and economy are less linked. Markets and cash flows, markets and profits are more linked. Economy and cash flows stroke profits are linked through margins. So over last 8 to 10 years, we have had 11+% nominal growth in the GDP, but our profit growth has been just about 7-8%. In this period, what has happened is, because of the tax cuts, primarily, the profit growth and hence retained earnings of India Inc. has been significantly higher. And markets, since they track cash flow increases or profit increases, one of the two should respond to it, and they have responded. So that is the manner of looking at the linkages, rather than looking at softness in the GDP number and then expecting the markets to drop. What has also happened on the margins is that because of overall discipline that the government has followed, the interest rates have tended to become softer. So for larger, better rated companies, interest rates have fallen, and that is also helping profits move up. So that is the reason profits in the current period are higher. Broad market profits are higher. If you look at the high quality, high growth part of the market, some place that we focus on, to give you some sense, in Q1, our profit growth was 22% for our portfolios. In Q2, it was in the vicinity of 40%, aided by tax cuts. In Q3, with whatever numbers that have been declared till now, half the portfolio companies have done so. The profit growth is between 30 and 35% that we see. So this is what the market is trying to discount, and we are hopeful hence that since over the next 2 odd quarters, the tax benefit will be seen on a YOY basis. Market should hold their level and stay on an average buoyant.
That's the view coming in. I just want to check in as to what's going on with the markets. We're holding out by about 0.5% now across the board. The mid and the small caps too are pretty much neck to neck with the frontliners. Pull up the Nifty Bank as well as some of those FMCG counters, and just let's see what some of those sectoral indices as well are up to. So holding out for the Nifty Bank, and that continues to remain a major support for our markets. 12,239 on the index. Outperformers within the broader universe, of course, there's Vodafone Idea. Ircon International continues its stellar up move, 2 straight days on the trot. There's Yes Bank that's in the green. Adani Green Energy, something like Mindtree, as well as Tata Motors are quite active. Tata Motors DVR included. There's PFC2, which is reacting post its quarterly numbers. Bandhan Bank in the limelight on the upside. UPL, of course, has been quite a stellar performer post its numbers. There's BPCL in the green after its strong show in Q3. Airtel holding out, L&T Finance, Asian Paints, as well as HCL Tech, Ultratech, and some of those pharma names like Lupin and Sun Pharma continue to be rather active. Prateek, is it a case of being very stock specific, picking out just those select counters where there is even some valuation comfort within the pharma basket?
Yeah, pharma has been doing well. Actually, domestic focused pharma companies have done very well. That's the space we are focused on. The story has changed. Earlier, we as investors used to focus on, yes, strong Indian business, but we were happy if the house had a strong US business as well. Now, over the period, the attractiveness of the US business has declined sharply. In every manner, pricing, size of success that you may have there, and hence return on investment. Plus, it is a commodity kind of a market prone to very sharp swings in pricing. So the focus has now become India and maybe rest of world. And if we have companies with good brands, large brands, we are happy to look at that set of companies.
For taking time out and joining in with your take on the markets. Good to have you on board.